Hey guys, Steve here from theturtlefollower.com with the strategy session for Monday, October 6th. Hope you guys had a great weekend. Hope you enjoyed your Monday back to work, if that's what you guys do. My day was quite busy, so needless to say, not a lot of tweets going out. I'm working on obviously trying to get the website up and running. I don't know if you saw the tweet in the afternoon, but I did set the new website up, so that's up and out available, so definitely head over there, check it out. I'm actually having some trouble getting on, so I don't know if I broke something or what, but if you guys go over there and you can't get on, please let me know so I can know if it's just me or if it's a website issue altogether. But let's get into the markets. So we talked about in the weekend update the need for some clarification at this point. We're not exactly sure which way we're heading, and with today's action, looks like we tried to break out. All right, we were up, I think, 8 points or 10 points with the futures early this morning. And really, once the market opened, we basically sold off. We really didn't put in too much in the way of higher prices. We couldn't break above the 50-day moving average, nor could we break above this downtrend line. So you could see here how having these conflicting uptrend and downtrend makes for a very choppy market at this point. All right, so if we would have closed, say, at 1970, then I would say yes, we're off to the races. We're probably heading back to new highs. Right now, to be honest, I'm more concerned that we break down here. That's just the way I'm looking at it. I would say if we were to break down below, I would say, was this 1940, say, being the closing low from this reversal day, then I would say we're probably in a little bit of pain, and it's probably going to continue down to the 1900 level. So we talked about that in the stock market outlook video from this morning, the need to either fill in, if we filled in this triangle here, that we were probably heading lower, and to right now, we're definitely being held in by this downtrend line. The same goes true for the NASDAQ, and I think even the Dow. All right, the downtrend line is controlling at this point. All right, we bounced right to it, sold off. Dow is the same, I'm pretty sure. Yep. All right, but the Dow, the difference is here in the Dow, we're still above the 50-day moving average here. So, if you were trying to grasp at straws for positives, that would be one of them. The other positive would be, depending on how you actually draw this line, we could be close to a breakout. Again, it's all really how you draw the line. But looking at the weekly charts, we're still very much in uptrends. I think, though, they may be, I'm not going to say that the longer term uptrend's coming to an end, but we may be putting in some significant correction coming up if this downtrend holds true. But for right now, we're still above it. One day doesn't necessarily lead to a significant reversal, but just looking at what's happening here, I would say, I think it's to the point where it needs to either consolidate in here and then break down, or consolidates up here and breaks up. So that's where the markets stand. Let's look at our positions real quick. Kind of a mixed bag today. Again, we're still in 7 positions just because I forgot to sell RSG when I was supposed to. So if you missed the weekend update, I apologize for that. That was my mistake, but it actually turns out we may be getting lucky on not selling it. Apple continues to just move sideways. Today was closed exactly unchanged, so you could see a choppy market. We have a couple stocks that are closing pretty much right at their open. This one and Disney. Disney was up 0.12%. So right now we're still waiting to see what happens first. If 97.97 breaks, or if we break out higher. But you could see here on Apple as well, depending on how technically you want to get with this, it's also in a little triangle. All right, so it's trying to figure out which way that wants to go. ADM down 1.02%. This one still holding on to the $50 level, but you can see what's happening now. The 50-day moving average is starting to flatten out. We are in the overbought conditions on the weekly chart. So if you're not up to speed on this new weekly chart, definitely head over to the Trade School video for tomorrow. Where I'm going to talk about that in a little further detail. So that'll be out tomorrow. But essentially what it's saying is these top two bands indicate overbought. These bottom two bands indicate oversold, with the intention that all the stocks will revert to their mean, which is the dashed line. So ADM just continues to move sideways. Disney up 0.12, so we had the bounce on Friday. Today, of course, came right into the bottom side of that 50-day moving average and the downtrend line, and again sold off. So a lot of stuff is not working right now because of the short-term downtrend. One stock that is still trying to work, it hasn't been as under pressure as the others, but you can see here Expedia is still working on this consolidation. So this would be a great setup if it actually comes true. We had the move higher, consolidation, move higher, consolidation. So if we can get the breakout over 88.35, then we're in good shape and we can move our stop up to this 83.33. You can see here they have earnings coming the end of the month. But to close up, this one was up 1.29%, but at one point it was up to almost $88. So $88 is definitely a significant resistance level right now. GD down 0.35. Again, this was one we held on to for a minimal break. It moved higher on Friday, and today pretty much still higher close, but it's a red day for GD today. So right now we actually adjusted the stop to this 121.75 using this closing low. And if we get a breakdown below that, then we will gladly exit the trade. But you can see here where the trend line is on GD. We're technically, if we broke these levels, we're not breaking the longer term trend line. So you can see that we can trade below the 50-day moving average and still be considered in an uptrend, and that's also in play with the weekly chart. The one thing that concerns me with GD is the low here, the lower high, lower low, potentially a lower high, and then potentially a breakdown and a lower low. So let's see how that plays out. But right now we're making a series of lower highs and lower lows, as opposed to before where we were making higher lows and higher highs. LUV down 0.17. Again, that trend line, that downtrend line is coming into play again with a lot of different stocks. And we've talked about it, but really depends on how you draw. If you draw to the tips, I typically like to draw to the tips when I draw trend lines. But you could see it came right up to the bottom of that trend line, still well above the 50-day moving average. This one looks good. Came up to that 50-day moving average and sold off. So we're not the only ones that draw these trend lines on these stocks, and so everybody kind of knows where everything should sell off. LUV has earnings coming up on the 23rd, so let's see what happens. I think if we can get these breaks of these trend lines on our stocks and also on the indices, then I would say rally's back on, good to go. For right now, it's really just wait and see which way we're going to break. Until that happens, I think we're at the point where we need to just be cautious. We have, I think, 7 positions. I think we're like 88%. So I just want to make sure that we're cautious in our trading, and we take the positions when they present themselves, and we also exit our trades when we should. So you can see here how the 50-day moving average at one point was so far away has now come in and is supporting the stock. So another good setup coming in LUV if we can get some sideways momentum or sideways movement and then a breakout higher. And the last one, RSG. Again, this was one that I was supposed to sell on a breakdown of this level here. Okay, the breakdown right here of 38.51. So instead, right now, we came back down to 37.86. and we bounced. So that's where we're gonna keep our stop now. So it's not a big deal. As I said in the weekend update, everybody makes mistakes. If you didn't sell it, and just redefine your stop and let it play out. But we've had 3 rally days here. This could very easily come into this downtrend line, reverse, put in a lower high, and then eventually a lower low, break down through that 37.86 level. So position wise, nothing bad, nothing great, kind of ho-hum. Nothing really exciting me as far as where our positions are. I think we're just kind of in a little bit of an awkward spot right now. I think we need to wait for a little more clarification. And as far as our watch list stocks go, we had a few that were up. Alcoa was up 2.5% today. So this one, I had personally gotten stopped out on a break below 16, which is right in here. This was the trigger day I exited, and I exited the next morning. Since it has consolidated a little bit, at one point it did look like this was going to be a short play. It could maybe very well still be a short play. You can see the 20-day moving average is now below the 50-day. Okay, so if you were shorting it, we talked about putting a stop over 1633, and now we're rallying right back into those trend lines. So that's why it's very difficult to sometimes short stocks, especially when they've been in such a big uptrend. A lot of people looking to buy them. And ultimately they do get supported, but you can see we're pretty much, it broke that longer term trend line. Now it's trying to work its way above it. I would say the first key level that it would have to pass would be 1633. If we can get above 1633, then the bulls have a good chance to take it to 1726. MJN is up 0.41%, so this one bouncing off the bottom of the consolidation. Again, right into the backside of the uptrend line that was in place. So we're still waiting on a break over 98.26 in that one. Now, Kroger was one I talked about, and I tweeted out earlier today that it potentially may be setting up a good long play. We looked at this over the weekend, kind of identified this 52.69 area. It had broken out on Friday, but I said I wanted to wait and see how Monday reacted. Now, today it was up 0.26%. And if it had closed with an open green candle, we would be all over it. The fact that it closed with a down candle, almost more like a reversal candle, I'm going to stay away. If we can get, maybe tomorrow, we can get the open green candle above here. Maybe we give up 50 cents. Then I will gladly take an entry, and we will put our stop probably down here at 50.09. So call it $50. That would be the setup I would take. That would require the break of the 50-day and the trend line, and also these previous lows and the lows of the consolidation. So that's the way I'm trading Kroger. Just waiting for that setup to happen. If it doesn't happen, we don't take the trade. Intel moving sideways. Sempra Energy close to breaking out over 107.27. And CCI was another one that we talked about over the weekend, how it moved sideways, came into this oversold conditions recently, broke out, now is setting up on the weekly chart, broke out again on Friday. And again, if this one had closed with an open green candle, we'd be in with a stop below 78.34. So that didn't happen, and for right now, we're just going to take a pass on CCI. So let's see if they set up again tomorrow. Let's see how the market reacts tomorrow. I'm hoping we can get a little bit clarification as to which way we're going to break. Obviously, I would say I'd be more leaning towards breaking to the upside, just because of how the trend has reacted over the past 3 years, or what was it, a year and a half, I guess, 2 years. I could probably even more than that. What am I talking about? Let's see the trend. Yeah, so pretty much 2 years. All right, so from the end of 2012 onward, the trend has been intact as it hit the oversold conditions. But so that would be my gut reaction. But it just, something makes me think that I feel like we're going to test lower prices before we're going to test higher prices. That's just gut feeling, but we'll see how it actually all plays out. So thanks for watching. Be sure to check out the trade school video tomorrow morning. We'll be with you again tomorrow night for another strategy session. And like I said, if you have a chance, please check out the new website, www.theturtlefollower.com. Let me know if you guys can log in. Let me know what you think of it. If you can get in, if you can't get in, please, shoot me a tweet or an email and let me know so I can take care of whatever technical issues are present. I never thought when I started this blog I'd have to become an expert in web design and and web mumbo jumbo. That I'm a good technical guy, but some of this stuff is completely over my head. But no matter what, I'll be here with another video. So hopefully either you're watching this on the website or on YouTube. All right, thanks for watching, guys. Have a great night.